I think that is one of the worst. The worst answer you can get is no, or no response. But I think it is such a weak positive commitment. Oh, that's the ultimate abdication of responsibility.
Our approach is 4 eyes are better than 2.
Uh-huh.
And that's not just wearing glasses. It is actually getting 2 people involved.
Yeah, I suppose it's like a psychology Rorschach test.
You know what? It's really difficult. But it's very, very difficult to go back and to rebut to a VC. It's slightly trite just to say it's rude, because of course it is rude, but I'm sure we have done that as well. In truth, it can sometimes mean it wasn't an obvious no, as in something that's totally outside of our sector. So I needed to think about it, but then it got a few too many days and I didn't know what to do with it, if I'm honest. That's kind of, that's a pit into saying no. So my advice is always that a friendly nudge is always appreciated. Probably don't do it within 20 seconds of sending the first email, because that's why we haven't replied. But nothing wrong with a friendly nudge. But I fear that it's not going to be positive news if you haven't had a reply back.
Just a further thought on that, Rogan. Sometimes it's actually better to create a new email as opposed to reply to the one you sent, because then people feel guilty about having not replied, and it looks quite obvious that it's been a long time, and so a new email works better. But I think maybe the follow-on to that question is, I've had a few meetings with a VC, and then they go blank on me, because I think one of the big frustrations we hear is when people say, "Oh, I thought the meetings were going very well," and then nothing back. And I think in that case, it's it's definitely a no, but it's because the VC it was a tough decision, and they feel bad saying no.
Sorry.
I was just going to say, it's sometimes because there isn't a good reason as well. You know what, we should all think of good reasons, but we're trying to do better ourselves, but sometimes it's because you don't have a particularly good reason, and the reason might be just don't really click with the founder. It's a pretty difficult thing to write.
So the reality here is there could be 2 answers. It could be that it's a little too early for them, and they would like to stay in touch and hear more about how it progresses. Or the second is that it's an easy out, right? Saying, oh, it's just a little bit too early is easier than referencing what Rogan said earlier, just not clicking with the founders, have concerns about other parts of the team, have concerns about the market size, etc. And it's just an easy way to politely...
To be honest, Sean, we should always have and we've talked about this in previous provisions, worked out the stage before we meet it. And in truth, we should know in a meeting, at the very least, whether it's early. So I think it's beholden on us to trail it early, as it were, to say this looks a bit early, because then that is a kind of genuine answer. If we've never mentioned it before, and then we suddenly fly back after a meeting, I think that's a problem.
Yeah, I mean, I think a lot of times we in meetings will say, listen, on the spectrum of where we invest, it's a little bit early for us. It doesn't mean it's a no. It just means that there will be a distribution of investments, and this is going to be on the very early side.
No, I agree. But what I mean is,
if something is...
Sorry, if we haven't said anything at all, then we shouldn't suddenly start referencing it post-meeting.
Agreed. That's just a cop-out.
You know what? It's really difficult, but it's very, very difficult to go back and to rebut to a VC. And here's the way I look at it. Every founder should genuinely believe in every part of their business, and is obviously going to have a more positive view than somebody who said no to them. We, VCs, see lots and lots and lots of opportunities. And so we can't really revisit each one. I think that we shouldn't just say it looks like it's a little bit small for us. We should try to kind of quantify, and if we've totally missed the point, you could come back, but it's not a particularly likely route of investment, if I'm honest.
And just to add to that, Rogan, I think part of it, when people say the market's not big enough, what that really means is we're unsure about whether you can build an exceptionally large business, because our fund dynamics dictate that we need to not generate a company that's worth 30, 40, 50 million, but a company that's worth many hundreds of millions. And so then what we're saying is we're unsure about whether an individual company in this market can generate enough traction and value to make it worthwhile from a venture capital investment.
means we love it because only the best people get to speak to VK.
Does that mean, it wasn't interesting to you, or?
No, so two different times. Right at the beginning, it is either because we know that we don't have a slot in our diary, or UVK, others in the team have specific interests, which sometimes fits better. So any future of work, go to VK. Any sustainability, go to Joe. But if I get a future of work thing, I'm obviously going to bring you in as well. I think post the meeting, it's probably a positive sign, because at least in our team, we're all very busy. We don't want to create extra work. It means that we want to dig in. And it means that, our approach is 4 eyes are better than 2. And that's not just wearing glasses. It is actually getting 2 people involved.
Yeah, and just to add to that, especially on a small team, what you're really looking for is a first meeting with a venture capital fund. And whether that's with an associate, a partner, whatever the title might be, it's about having it in, because the goal of any first meeting, whether it's with an associate or a partner, is basically to have an extended second meeting. Because the first meeting is really about testing whether there's a fit between the investor and the company. The next meeting is actually where you really dive into depth on the business. And that's what you're trying to get. And at least on a small venture team, we sit around and we chat about companies after every meeting, and we're all in the same room together. There's probably a lot of things that you can unwrap from that. I think the biggest one would be, has the founder thought about the scalability of the business? Do they have a credible plan about how they grow from 10 to 10,000 customers? Because I think for every business we look at, there's this inherent tension between, I've got to prove something right now, and do I have an immediate plan? But I have also thought ahead for a year and a half from now about where the company needs to get to. And so once again, coming back to the fact that you need to create a very large company, has this founder given credible thought to what it will take to create a very large company, which means many customers?
I think that's one where it does what it says on the tin. What we're after is, what is the plan?
I suppose it's like a psychology Rorschach test, I suppose. It could mean, where do you think the team is lacking in skills right now? Where do you think you need to add to on the senior management team once you start to scale the company?
I don't think I've ever asked that question, like the senior role. I mean, we ask where you're going to invest, but kind of, I'm guessing it's feeling of it. If somebody asks you that, I'm not sure what, I mean, it seems like an odd question to ask me that. I'd be slightly flummoxed, I think, if I was a startup. Wouldn't know what it meant.
Why someone asked what it meant when a VC asked that question.
I suppose if it's it could be obvious in the team that there's certain areas. For example, if you don't have a marketing person, then I guess the answer there is we need to hire a senior marketing person to come on board. But there's a lot of context to that question, I suppose.
Okay, maybe I'm desperately trying to think of why somebody would ask that, but maybe it is to see where the founder's priorities lie. So to Sean's point, let's say you're missing marketing, you're missing a kind of tech person, and you're missing a content person. It's what is the most important part of the business for you.
I think it's a simple one. They're trying to see what you've accomplished and how long and how much it's taken you to accomplish that, right? Because what we're doing is when we invest, we're actually thinking ahead a little bit about if we give them this €1,000,000, what will they be able to accomplish with that? And will they generate enough proof points to raise additional capital? And if we can see on very little money that they've accomplished quite a bit, it gives us confidence that our money will be well invested and put them in a position to be able to raise money again.
I think there's also a separate thing, which is we and all other VCs like momentum. So what we don't like is we've raised 5 billion in the past, we're now raising 1 million, because that's directionally the wrong way. I mean, it's a little bit kind of, I suppose, petty, but you want the raises to be going up, because usually that means the valuations are going up. And that's always a positive way to do it.
And also the timing of those, right? If there's been money over the last 4 years that's coming in drips and drabs, it doesn't necessarily create that momentum on a fundraising process. But
that's obvious. It's asking whether people who know the company much better than we do, by definition, because they've worked with the company since they've invested, are also invested. I think we've talked about this in previous provisions. The reality is that as a starting point, you want to see at least pro rata investment from the existing investors. There are exceptions, so often angels don't deserve much. It's a different kind of dynamic there. If it's a very, very early stage fund that is obviously tapped out or never does another round, that's fine. But it's certainly a negative sign if a investor who could be investing pro rata does not. I think I'm going to step up on that and say, if it's a really large investor who put a little amount of money in just to test the water, it's probably a bad sign if they're not doing more than their pro rata. So a huge fund who's put in a little bit at the beginning and then says, well, I'm doing $500,000 of this round, you think, possibly you're not so excited by it.
Yeah, I think one of the key criteria for us in the current environment is almost super pro rata by existing investors, because we know fundraising is getting trickier for everyone out there. And everyone who can is doubling down on the businesses that they believe are doing well. And if we see an existing investor that says, would rather sit this one out, it just gives us pause.
Again, there's multiple different tranches. I mean, we're never too young to learn, as it were, and we've noticed a few of our co-investors in other deals who do tranches, but these are not tranches based on milestones or based on any optionality. They are guaranteed to be paid in 6 months' time, let's say. But the reason for doing it like that is the way that VCs get paid, which is the returns relative to drawdown. So if you can delay some of that drawdown by 6 months, it's actually quite beneficial for our IRRs. That, frankly, is a bit of financial engineering. I think it's fine if you're the founder. The only risk you have is that fund going to be around in 6 months and be able to draw down, which largely they will get.
But I think the other part of it, if an investor wants to basically tranche it based on milestones, as a founder, that's incredibly tough to take on. Because if there's one thing we all know is that founders are generally very optimistic about their timeframes and what they'll accomplish and how little it will cost. And so I think it's always going to take a little bit longer. And if you're sitting there and you're waiting to have to hit a milestone before you can access more capital, it's going to be incredibly detrimental to your ability to properly invest in the company if you're always worried about where the next paycheck is coming from. So I would, as a founder, definitely not take that under any circumstance.
Last thing to say, if you've got negative interest rates, sometimes it's not a bad thing for the company to tranche.
I'm not sure there's that much subcontext in that one. Sometimes people believe convertible loan notes are a little bit easier to negotiate because you're not getting to the nitty-gritty about board seats and other components of the negotiation. So it could be as little as let's just, it's an early stage company, let's delay some of those longer conversations until a later stage at the next round. So I wouldn't view that as necessarily a negative if they want to
I wouldn't view it as a negative just because it's still suggesting that they want to invest, which is obviously a positive. But it also suggests that there is a likely disagreement of valuation, I'd say. The thing that convertibles can do is delay the valuation discussion.
But Rogan, you always know on every convertible we negotiate a cap and then a discount to it.
So what the hell's the point of having a convertible then?
But that cap ends up becoming the pricing of the round most likely anyway. So it's
as you know, I don't like convertibles, but I agree on that. But if that's the case, why would anybody ask to do a convertible?
I suppose you don't have to get into the negotiations over option pool amounts. You don't have to get into the board structure. You don't have to get into some of the reserve club matters.
Decisions. B, we should be prepared to make hard decisions with our founders. So, I mean, I've literally never heard somebody say that. But apart from pricing, I can't see any reason why it's. I think you'll find that that's normal.
Well, it's a negotiation. But what they mean is the price is too high. If they ask you to dilute more, what they're saying is we're not comfortable with the price where it is, right? And in every
the
single...
raise is too little.
Or the raise is too little. Yes. Yeah. Good point.
And that is the opening of a negotiation, right? If you're a founder, there's almost an expectation that you should try and
Yeah, I mean, I think in rounds, there are times when, as an investor, you're a price maker and times when you're a price taker, right? So when another venture fund introduces us to a deal and they've done a lot of legwork on the term sheet, it's not our job to negotiate price, right? We either like it or we don't, and we're a price taker in that instance. When we are the fund that is leading the negotiations and leading the syndicate, in that case, we are the price maker. And then we'll have a more substantive conversation around pricing, around dilution, around option pool, around how much money comes in, etc. But
we're only the price maker if there's nobody else involved. Otherwise, we might be a price taker. You know, last year when it was party time for price, price was coming down. The reality is, as Sean said, it is a negotiation. Dilution is the right thing to be talking about, not pricing. It's a dilution effect. We do know that founders need to be incentivized by having a decent stake. At the same time, we need to have a decent stake ourselves. So I mean, that's the pull and the push.
To be fair as well, Rogan, I think, VK, I'm going to continue if that's okay, if you don't cut me off. Rogan's eloquently described it as in the public markets when you're buying a stock, it's about consensus. It's about where everyone views the share, the price of the share to be. In the private markets, in venture capital, all it takes is one outlier, right? One person can set the price for a deal. So when we issue a company a term sheet, they will, in most cases, go and shop that to other people and see if anyone else wants to match or beat that term sheet. And all it takes is one person to beat it, and then they are the price maker in this instance. I think that is one of the worst. The worst answer you can get is no, or no response. But I think it is such a weak positive commitment. Because I think as a founder, what you're looking for is people that are passionate about the business. And what you'd want is someone to say, hey, we're going to lead this round. Or second would be, hey, as long as you get to your minimum amount, we're in. So you said you want to raise $1 million, we're in for 200K as long as you can get to the $1 million. I think the lemming answer of if you can find a lead means they just want to see who else is interested. And if they think that person is a smart person or a leading fund, then they'll invest. So they're just creating optionality for themselves. And I actually think it's not great for founders.
Is there any difference from saying, get to $1 million and we're in for 200 grand? I mean, it's basically saying the same thing.
It's a weaker answer because they say if you can find a lead, then they say who is the lead, and they go, ooh, it's not Sequoia in the US. We're out then. I think they're just.
It's the same with the 200 grand. That's not binding. I mean, term sheets aren't binding either. I agree with Sean. Although there are times, I'm also conscious there are times usually if it's a bigger deal, when we know that we won't be able to do a deal on its own. So if somebody's raising 4 million, let's say, we're not going to be able to do it on our own anyhow. There we might have to say we need to get other people into the round, but we explain why. And I think, as Sean says, what a founder should look for is a commitment on that. So something that can help them coalesce the round around a commitment.
Yeah.
He's just trying to say it's a bloody difficult journey. We need to be thinking not just about the now, but the next round. I mean, I actually think that I view that as a very positive sign because it shows that the VC is already starting to work with the founder. But I mean, whenever we make an investment, that is the question that we, together with the founder, need to answer because we're on a common journey then to get to that next round.
Yeah, I mean, any company that starts raising venture capital ends up on what we call the treadmill, where you're investing in growth, you're investing ahead of revenues, you're growing the cost base, and you're going to have to raise money again in 12 to 18 months. To raise money, you need to have a very good story about what you've accomplished on this round and what the additional capital is going to buy you. And so I think if someone says, let's map that out together, I think they are almost kind of half pregnant at that time, right? They're already thinking ahead to the next stage, which is a very positive sign.
It's telling you, I think actually in kind of lazy parlance, it's telling you the VC feels it's too early for them. But the reality is that's ridiculous on two fronts. A, why not just say that? And B, as we know, actually nowadays, a lot of angels are quite late stage investors, super angels, but probably bigger than us anyhow. So I think it's a throwback to a previous language where there was a more rigid, you raise from friends and family, angels, VC, then growth. There's a kind of path. And so all you're saying is, I think you're earlier in the evolution than us.
But VK, if they said, have you thought about raising from angels, and here are 2 or 3 angels you should go speak to, I think in that case, it could be, hey, let's look at a round together with some angels, or here's some angels we really like, and we'd really love to kind of keep tabs on the business for the next round. So it really depends on the framing of the question. That's the ultimate abdication of responsibility. The investment committee is this ephemeral thing that no one really knows who or what it is. It's the man behind the curtain from The Wizard of Oz. It's easy to defer to the investment committee. I think what it means is there's a tough decision to be made, and they're looking for cover on the decision that they're about to make from a VC perspective.
So I think there's a problem here also, which is there's nuance and there's differences between people. So the reality is that there is no decision, there's no investment that I can make or Sean can make without genuinely talking to other members, first of all, Info founders, and then the wider committee. So broadly, if I say I'd like to go and talk to Sean about it, that's probably a positive thing. Or I'd like to go and talk to me again, it's probably a positive thing. But what you probably want to see it backed up with is a meeting put in with Sean or with me. Equally, I'd like to hear progress afterwards. But if it's, I tell you what, let's see what the investment committee mean, like that, reasonably non-committal. It's a kind of lazy way of saying no, cowardly way of saying no.